What is this costing the union at this point if it's costing GM $50 to $100 million a day?
Well, our estimate for GM is about $450 million a week, so we're now 3 weeks beyond, so about $1.5 billion so far. And the union is paying strike pay to all of its workers, so that's about $11.5 to $12 million a week. They have a strike fund that's a little bit more than $800 million, so they could last about 60 weeks.
Wow. Do you think that's likely? I thought we were reaching a deal at some point.
I don't think that's likely, but their fund is very, very strong.
What do you think happens, and what are the biggest sticking points? Because we thought we were very close to a deal before.
Well, the sticking points still appear to be wages, job security, investment in the plants, and a pathway for permanent work for the temporary workers at General Motors.
What do you think the most likely scenario would be? Would GM ever agree to bring back a car that's produced in either Mexico or China and produce it in the United States?
They've done that in the past. Every union negotiation, there is usually a listing of all the product guarantees that the union has won, and oftentimes there is something saying this is work originally intended for Mexico. Sometimes it's a switch. The work for Mexico has come to the United States, and work that was intended for the United States then swaps out and goes to Mexico. But that's part and parcel of conveying job security to the workforce is that there's product and investment in their plants.
GM seems to be digging its heels in because they don't want to wind up in a situation like they were in just over a decade ago when it looked like the company could go bankrupt. However, you have seen the president wade into these talks already with some of the earlier plant closures that GM had proposed and then started to undertake. What do you think happens just in terms of the political backdrop and what you might expect to see from the Trump White House?
Well, the president has been remarkably quiet through this set of negotiations, more than I thought he would be. The plants, the 4 plants that were unallocated back in November, GM has intended to close at least 3 of those. There's been talk during these negotiations about keeping one on, the Detroit Hamtramck plant. General Motors had over 1 million units of underutilized capacity in the United States, and those actions took out about half of that underutilized capacity and brought them more in line with profitable operation of about 80 to 85% utilization.
So what does that mean?
That means I think something's going to close, or at least, the union has a letter that they've negotiated with GM that says you cannot close plants during the term of an agreement, and so GM came up with a new way to close plants by using the word unallocated. I expect that they may have, these plants could live on in this agreement as exempt from that plant closure policy, or they could agree in this round to close them. It's generally 4 to 8 years to close a plant in the past. So this would be very rapid if they made the announcements in November and there was resolution of those announcements by this fall.
The union has a point. GM is very healthy, has done very well, is very profitable. But what do you see on the horizon at this point, just in terms of whether there's a slowdown coming to the United States, whether they'd be able to withstand a recession that would potentially hit our shores?
Well, General Motors is much stronger now than it was when we went into the recession in 2008, 2009. And they've learned from those mistakes and they want to not repeat them. They're both both sides are looking at the same set of economic data. They're looking at slowing auto sales, a whole lot of risk from trade policies and fuel economy regulations that aren't yet set, new investments that the companies are all making in automation and electrification that bring risk to the business, along with the underlying risk of what's the economy and does General Motors have the vehicles that people want to buy. They look at that same set of data, and the company says, well, we need some flexibility and contingency because things could get bad and we don't want to get stuck in the situation we were in before. And the union looks at that and says, this is getting very uncertain. We've relied on profit sharing to be part of our compensation. Profits may be hit. We want to lock down those things into base wage increases and have job security, income security for all of our members, including the temporary workers, through this next downturn.
What about the argument that GM workers already make more than just about anybody else in the business?
GM workers' wages are the same as they are at Ford and FCA, and very close to what they are at Toyota and Honda. GM's average hourly labor cost is the highest in the United States, partially because they paid out almost $11,000 in profit sharing last year. And they're also carrying the cost of more workers. You know, there's more people in the numerator, the cost side of things, than there are in the denominator, the hours side of things. So the average hourly labor cost is all labor cost divided by the number of hours worked.